on in America today? Why are we over our heads in debt? Why can't the politicians bring debt under control? Why are so many people, often both parents now, working at low-paying, dead-end jobs and still making do with less? What's the future of the American economy and way of life? Why does the government tell us inflation is low when the buying power of our paychecks is declining at an alarming rate? Only a generation ago, bread was a quarter, and you could get a new car for $19.95.
The problem is that since 1864, we've had a debt-based banking system. All our money is based on government debt. We cannot extinguish government debt without extinguishing our money supply. That's why talk of paying off the national debt without reforming our banking system is an impossibility. That's why the solution does not lie in discussing the size of the national debt, rather it lies in reforming our banking system. This is the Federal Reserve headquarters in Washington. It sits on this very impressive address, right on Constitution Avenue, right across from the Lincoln Memorial. But is it federal? Is it really part of the United States government? Well, what we're about to show you is that there's nothing federal about the Federal Reserve, and there are no reserves. The name is a deception created back before the Federal Reserve Act was passed in 1913 to make Americans think that America's central bank operates in the public interest. The truth is that the Federal Reserve is a private bank owned by private stockholders and run purely for their private profit.
That's exactly correct. The Fed is a privately owned for-profit corporation which, again, has no reserves, at least no reserves available to back up the Federal Reserve notes, which is our common currency.
Oh, absolutely. The Federal Reserve is neither federal and has doubtful reserves. It's a private bank that is owned by member banks. And it was chartered under the guise of deceit by an act of Congress in 1913.
If there's still any doubt whether the Federal Reserve is a part of the U.S. government, check your local telephone book. In most cities, it is not listed in the blue government pages. It is listed in the business white pages right next to Federal Express, another private company. But more directly, U.S. courts have ruled time and time again that the Fed is a private corporation. Why can't Congress do something about the Fed? Most members of Congress just don't understand the system, and the few who do are afraid to speak up. For example, initially a veteran congressman from Chicago asked us if he could be interviewed for this video. However, both times our camera crew arrived at his office to do the interview, this was all we were able to film. The congressman never appeared, and eventually decided he no longer wanted to participate. But a few others in Congress have been bolder over the years. Here are 3 quick examples. In 1923, Representative Charles A. Lindbergh, a Republican from Minnesota, and father of the famed aviator Lucky Lindy, put it this way: the financial system has been turned over to the Federal Reserve Board. That board administers the finance system by authority of a purely profiteering group. The system is private, conducted for the sole purpose of obtaining the greatest possible profits from the use of other people's money. One of the most outspoken critics in Congress of the Fed was the former chairman of the House Banking and Currency Committee during the Great Depression years. Lewis T. McFadden, Republican of Pennsylvania, said in 1932, "We have in this country one of the most corrupt institutions the world has ever known. I refer to the Federal Reserve Board. This evil institution has impoverished the people of the United States and has practically bankrupted our government. It has done this through the corrupt practices of the moneyed vultures who control it." Senator Barry Goldwater was a frequent critic of the Fed. Most Americans have no real understanding of the operation of the international moneylenders. The accounts of the Federal Reserve System have never been audited. It operates outside the control of Congress and manipulates the credit of the United States.
The Federal Reserve really, even though it is not part of the federal government, It is more powerful than the federal government. It's more powerful than the president, the Congress, and the courts. Now, a lot of people challenge me on that, but let me prove my case. The Federal Reserve determines what the average person's car payment is going to be, what their house payment is going to be, and whether they have a job or not. And I submit to you that that's total control. And the Federal Reserve is the largest single creditor of the United States government. What does Proverbs tell us? The borrower is servant to the lender.
What one has to understand is that from the day the Constitution was adopted right up to today, the folks who profit from privately owned central banks, as Madison called them, the money changers, have fought a running battle for control over who gets to print America's money. Why is who prints the money so important? Think of money as just another commodity. If you have a monopoly on a commodity that everyone needs, everyone wants, and nobody has enough of, there are lots of ways to make a profit, and also exert tremendous political influence. That's what this battle is all about. Throughout the history of the United States, the money power has gone back and forth between Congress and some sort of privately owned central bank. The Founding Fathers knew the evils of a privately owned central bank. First of all, they had seen how the privately owned British central bank, the Bank of England, had run up the British national debt to such an extent that Parliament had been forced to place unfair taxes on the American colonies. In fact, as we'll see later, Ben Franklin claimed that this was the real cause of the American Revolution. Most of the Founding Fathers realized the potential dangers of banking and feared bankers' accumulation of wealth and power. Jefferson put it this way:
I sincerely believe that banking institutions are more dangerous to our liberties than standing armies. The issuing power should be taken from the banks and restored to the people to whom it properly belongs.
That succinct statement of Jefferson is, in fact, the solution to all our economic problems today. It bears repeating. The issuing power should be taken from the banks and restored to the people to whom it properly belongs. James Madison, the main author of the Constitution, agreed. Interestingly, he called those behind the central bank scheme money changers. Madison strongly criticized their actions.
History records that the money changers have used every form of abuse, intrigue, deceit, and violent means possible to maintain their control over governments by controlling money and its issuance.
The battle over who gets to issue our money has been the pivotal issue throughout the history of the United States. Wars are fought over it, depressions are caused to acquire it. Yet after World War I, this battle was rarely mentioned in newspapers or history books. Why? By World War I, the money changers, with their dominant wealth, had seized control of most of the nation's press. Throughout U.S. history, this battle over who gets the power to issue our money has raged. In fact, it's changed hands back and forth 8 times since 1764. Yet this fact has virtually vanished from public view for over 3 generations behind a smokescreen emitted by Fed cheerleaders in the media. Until we stop talking about deficits and government spending and start talking about who controls how much money we have, it's all just a big shell game, a complete and utter deception. It won't matter if you pass an ironclad amendment to the Constitution mandating a balanced budget. Our situation is only going to get worse until we root out the cause at its source. What's the solution for our national problem? First of all, education. That's what this video presentation is all about. But secondly, we must act. We must take back the power to issue our own money. Issuing our own money is not a radical solution. I want to stress that. It's the same solution used at different points in U.S. history by men like Benjamin Franklin, Thomas Jefferson, Andrew Jackson, Martin Van Buren, and Abraham Lincoln. So, to sum it up, in 1913, Congress gave an independent central bank deceptively named the Federal Reserve, a monopoly over issuing America's money. And the debt generated by this quasi-private corporation is what is killing the American economy. Though the Federal Reserve is now the most powerful central bank in the world, it was not the first. So where did this idea come from? To really understand the magnitude of the problem, we have to travel back to Europe. Just who are these money changers James Madison spoke of? In the Bible, 2,000 years ago, Jesus drove the money changers from the temple. It was the only time Jesus used force during his ministry. What were money changers doing in the temple? When Jews came to Jerusalem to pay their temple tax, they could only pay it with a special coin, the half shekel of the sanctuary. This was a half ounce of pure silver about this size. It was the only coin around at that time which was pure silver and of assured weight without the image of a pagan emperor. Therefore, to Jews, the half shekel was the only coin acceptable to God. But these coins were not plentiful. The money changers had cornered the market on them. Then they raised the price, just like any other commodity, to whatever the market would bear. In other words, money changers were making exorbitant profits because they held a virtual monopoly on money. The Jews had to pay whatever they demanded. To Jesus, this totally violated the sanctity of God's house. But the money-changing scam did not originate in Jesus' day. 200 years before Christ, Rome was having trouble with money changers. 2 early Roman emperors had tried to diminish the power of the money changers by reforming usury laws and limiting land ownership to 500 acres. They were both assassinated. In 48 BC, Julius Caesar took back the power to coin money from the money changers and minted coins for the benefit of all. With this new, plentiful supply of money, he built great public works projects. By making money plentiful, Caesar won the love of the common man. But the money changers hated him. Some believe this was an important factor in Caesar's assassination. One thing is for sure, with the death of Caesar came the demise of plentiful money in Rome. Taxes increased, as did corruption. Just as in the case of America today, usury and debased coin became the rule. Eventually, the Roman money supply was reduced by 90%. As a result, the common people lost their lands and their homes, just as is about to happen soon in America. With the demise of plentiful money, the masses lost confidence in the Roman government and refused to support it. Rome plunged into the gloom of the Dark Ages. A 1,000 years after the death of Christ, money changers, those who loan out and manipulate the quantity of money, were active in medieval England. In fact, they were so active that acting together, they could manipulate the entire English economy. These were not bankers per se. The money changers generally were the goldsmiths. They were the first bankers because they started keeping other people's gold for safekeeping in their vaults. The first paper money was merely a receipt for gold left at the goldsmith. Paper money caught on because it was more convenient than carrying around a lot of heavy gold and silver coins. Eventually, goldsmiths noticed that only a small fraction of the depositors ever came in and demanded their gold at any one time. Goldsmiths started cheating on the system. They discovered that they could print more money than they had gold, and usually no one would be the wiser. Then they could loan out this extra money and collect interest on it. This was the birth of fractional reserve banking. That is, loaning out many times more money than you have assets on deposit. So, if $1,000 in gold were deposited with them, they could loan out about $10,000 in paper money and draw interest payments on it, and no one would ever discover the deception. By this means, goldsmiths gradually accumulated more and more wealth and used this wealth to accumulate more and more gold. Today, this practice of loaning out more money than there are reserves is known as fractional reserve banking. Every bank in the United States is allowed to loan out at least 10 times more money than they actually have. That's why they get rich on charging, let's say, 8% interest. It's not really 8% per year, which is their income. It's 80%. That's why bank buildings are always the largest in town. But does that mean that all interest or all banking should be illegal? Hardly. In the Middle Ages, canon law, the law of the Catholic Church, forbade charging interest on loans. This concept followed the teachings of Aristotle and St. Thomas Aquinas. They taught that the purpose of money was to serve the members of society, to facilitate the exchange of goods needed to lead a virtuous life. Interest, in their belief, hindered this purpose by putting an unnecessary burden on the use of money. In other words, interest was contrary to reason and justice. Reflecting church law in the Middle Ages, Europe forbade charging interest on loans and made it a crime called usury. As commerce grew, and therefore opportunities for investment arose in the late Middle Ages, it came to be recognized that to loan money had a cost for the lender, both in risk and in lost opportunity. So some charges were allowed, but not interest per se. But all moralists, no matter what religion, condemn fraud, oppression of the poor, and injustice as clearly immoral. As we will see, fractional reserve lending is rooted in a fraud, results in widespread poverty, and reduces the value of everyone else's money.
The ancient goldsmiths discovered that extra profits could be made by rowing the economy between easy money and tight money. When they made money easier to borrow, then the amount of money in circulation expanded. Money was plentiful. People took out more loans to expand their businesses. But then the money changers would tighten the money supply. They would make loans more difficult to get.
What would happen? Just what happens today. A certain percentage of people could not repay their previous loans and could not take out new loans to repay the old ones. Therefore, they went bankrupt and had to sell their assets to the goldsmiths for pennies on the dollar.
The same thing is still going on today. Only today, we call this rowing of the economy up and down the business cycle.
Like Julius Caesar, King Henry I of England finally resolved to take the money power away from the goldsmiths about 1100 AD. Henry could have used anything as money, seashells, feathers, or even yak dung, as is often done in remote Tibetan provinces. But he invented one of the most unusual money systems in history. It was called the tally stick system.
Here I have one of the few surviving examples of this form of British money, which lasted 726 years until 1826, a tally stick. The tally system was adopted to avoid the monetary manipulation of the goldsmiths.
Tally sticks were money fabricated out of sticks of polished wood. Notches were cut along one edge of the stick to indicate the denominations.
Then the stick was split lengthwise through the notches so that both pieces still had a record of the notches.
The king kept one half to protect against counterfeiting. Then he would spend the other half into the economy and they would circulate as money. This particular tally stick is huge. It represented 25,000 pounds. One of the original stockholders in the Bank of England purchased his original shares with this stick. In other words, he bought shares in the world's richest and most powerful corporation with a stick of wood. It's ironic that after its formation in 1694, the Bank of England attacked the tally stick system because it was money outside the power of the money changers, just as King Henry had wanted it to be.
Why do people accept sticks of wood for money?
That's a great question. Throughout history, people traded anything they thought had value and used as money. You see, the secret is that money is only what people agree on to use as money. What's our paper money today? It's really just paper. But here's the trick. King Henry ordered that tally sticks had to be used to pay the king's taxes. This built-in demand for tally sticks immediately made them circulate and be accepted as money. And they worked well. In fact, no other form of money has worked so well for so long as tally sticks. Keep in mind, the British Empire was built under the tally stick system. The tally stick system succeeded despite the fact that the money changers constantly attacked it by offering the metal coin system as competition. In other words, metal coins never went completely out of circulation, but tally sticks hung on because they were good for the payment of taxes. Finally, in the 1500s, King Henry VIII relaxed the laws concerning usury, and the money changers wasted no time reasserting themselves. They quickly made their gold and silver money plentiful for a few decades. But when Queen Mary took the throne and tightened the usury laws again, the money changers renewed the hoarding of gold and silver coins, forcing the economy to plummet. When Queen Mary's sister, Queen Elizabeth I, took the throne, she was determined to regain control over English money. Her solution was to issue gold and silver coins from the public treasury and take the control over the money supply away from the money changers. Although control over money was not the only cause of the English Revolution in 1642, religious differences fueled the conflict. Monetary policy played a major role. Financed by the money changers, Oliver Cromwell finally overthrew King Charles, purged the Parliament, and put the king to death. The money changers were immediately allowed to consolidate their financial power. The result was that for the next 50 years, the money changers plunged Great Britain into a series of costly wars. They took over a square mile of property in the center of London, known as the City of London. This area today is still known as one of the 3 predominant financial centers of the world. Conflicts with the Stuart kings led the money changers in England to combine with those in the Netherlands to finance the invasion of William of Orange, who overthrew the Stuarts in 1688 and took the English throne.
By the end of the 1600s, England was in financial ruin. 50 years of more or less continuous wars with France and Holland had exhausted her.
Frantic government officials met with the money changers to beg for the loans necessary to pursue their political purposes. The price was high. A government-sanctioned, privately owned bank which could issue money created out of nothing. It was to be the modern world's first privately owned central bank, the Bank of England. Although it was deceptively called the Bank of England to make the general population think it was part of the government, it was not. Like any other private corporation, the Bank of England sold shares to get started. The investors, whose names were never revealed, were supposed to put up £1.25 million British pounds in gold coin to buy their shares in the bank, but only £750,000 was ever received. Despite that, the bank was duly chartered in 1694 and started out in the business of loaning out several times the money it supposedly had in reserves, all at interest.
In exchange, the new bank would loan British politicians as much of the new currency as they wanted, as long as they secured the debt by direct taxation of the British people.
So, legalization of the Bank of England amounted to nothing less than legal counterfeiting of a national currency for private gain. Unfortunately, nearly every nation now has a privately controlled central bank using the Bank of England as the basic model. Such is the power of these central banks that they soon take total control over a nation's economy. It soon amounts to nothing but a plutocracy, rule by the rich. It would be like putting control of the army in the hands of the mafia. The danger of tyranny would be extreme. Yes, we need central banks. No, we do not need them in private hands. The central bank scam is really a hidden tax. The nation sells bonds to the central bank to pay for things it does not have the political will to raise taxes to pay for. But the bonds are purchased with money the central bank creates out of nothing. More money in circulation makes your money worth less. The government gets as much money as it needs, and the people pay for it in inflation. The beauty of the plan is that not one person in 1,000 can figure it out because it's usually hidden behind complex-sounding economics gibberish. With the formation of the Bank of England, the nation was soon awash in money. Prices throughout the country doubled. Massive loans were granted for just about any wild scheme. One venture proposed to drain the Red Sea to recover gold supposedly lost when the Egyptian army drowned pursuing Moses and the Israelites. By 1698, government debt grew from the initial £1.25 million to £16 million. Naturally, taxes were increased and then increased again to pay for all of this. With the British money supply firmly in their grip, the British economy began a wild roller coaster series of booms and depressions, exactly the sort of thing a central bank claims it is determined to prevent.
There are two things which I think are intrinsic not just to the Bank of England but to central banking generally. The first is an involvement in the formulation of monetary policy with the specific objective of achieving monetary stability.
However, since the Bank of England took control, the British pound has rarely been stable. Now let's take a look at the role of the Rothschild family, the family said to be the wealthiest in the world. This is Frankfurt, Germany. 50 years after the Bank of England opened its doors, a goldsmith named Amschel Moses Bauer opened a coin shop, a counting house, in 1743. And over the door he placed a sign depicting a Roman eagle on a red shield. The shop became known as the Red Shield Firm, or in German, Rothschild. When his son, Amschel Meyer Bauer, inherited the business, he decided to change his name to Rothschild. Amschel soon learned that loaning money to governments and kings was more profitable than loaning to private individuals. Not only were the loans bigger, but they were secured by the nation's taxes. Mayer Rothschild had 5 sons. He trained them all in the skills of money creation, then sent them out to the major capitals of Europe to open branch offices of the family banking business. His first son, Amschel Meyer, stayed in Frankfurt to mind the hometown bank. His second son, Solomon, was sent to Vienna. His third son, Nathan, was clearly the most clever. He was sent to London at age 21 in 1798, 100 years after the founding of the Bank of England. His fourth son, Karl, went to Naples, and his fifth son, Jacob, went to Paris. In 1785, Mayer Amschel moved his entire family to this larger house, a 5-story dwelling he shared with the Schiff family. This house was known as the Green Shield. The Rothschilds and the Schiffs would play a central role in the rest of European financial history and in that of the United States. The Rothschilds broke into dealings with European royalty here at Wilhelmshof, the palace of the wealthiest man in Germany, in fact, the wealthiest monarch in all Europe, Prince William of Hesse-Kassel. At first, the Rothschilds were only helping William speculate in precious coins. But when Napoleon chased Prince William into exile, he sent £550,000, a gigantic sum at that time, to to Nathan Rothschild in London with instructions for him to buy consols, British government bonds, also called government stock. But Rothschild used the money for his own purposes. With Napoleon on the loose, the opportunities of wartime investments were nearly limitless.
William returned here sometime prior to the Battle of Waterloo in 1815. He summoned Rothschild and demanded his money back.
The Rothschilds returned William's money with the interest the British consuls would have paid him had the investment actually been made. But the Rothschilds kept all the past profits they had made using William's money. Nathan Rothschild later bragged that in the 17 years he'd been in England, he'd increased his original £20,000 stake given to him by his father by 2,500 times.
By cooperating within the family, the Rothschilds soon grew unbelievably wealthy. By the mid-1800s, they dominated all European banking and were certainly the wealthiest family in the world.
They financed Cecil Rhodes, making it possible for him to establish a monopoly over the diamond and gold fields of South Africa. In America, they financed the Harrimans and railroads, the Vanderbilts and railroads and the press, and Carnegie in the steel industry, among many others.
In fact, during World War I, J.P. Morgan was thought to be the richest man in America. But after his death, it was discovered that he was actually only a lieutenant of the Rothschilds.
Once Morgan's will was made public, it was discovered that he owned only 19% of J.P. Morgan companies. By 1850, James Rothschild, the heir of the French branch of the family, was said to be worth 600 million French francs, 150 million more than all the other bankers in France put together.
He built this mansion called Ferrier, just east of Paris.
Wilhelm I, on seeing it, exclaimed, "Kings couldn't afford this. It could only belong to a Rothschild." Another 19th century French commentator put it this way: "There is but one power in Europe, and that is Rothschild." There is no evidence that their predominant standing in European or world finance has changed.
Now let's take a look at the results the Bank of England had produced on the British economy and how that later was the root cause of the American Revolution. By the mid-1700s, the British Empire was nearing its height of power around the world. But Britain had fought 4 costly wars in Europe since the creation of their privately owned central bank, the Bank of England. The cost had been high. To finance these wars, the British Parliament here had borrowed heavily from the bank. By the mid-1700s, the government's debt here in Britain was £140 million, a staggering sum for those days. Consequently, the British government embarked on a program of trying to raise revenues from their American colonies in order to make their interest payments to the bank. But in America, it was a different story. The scourge of a privately owned central bank had not yet hit. This is Independence Hall in Philadelphia, where the Declaration of Independence and Constitution were signed. In the mid-1700s, pre-revolutionary America was still relatively poor. There was a severe shortage of precious metal coins to trade for goods, so the early colonists were forced to experiment with printing their own homegrown paper money. Some of these experiments were successful. Franklin was a big supporter of the colonies printing their own paper money.
In 1757, Franklin was sent to London. He ended up staying for the next 18 years here, nearly until the start of the American Revolution. During this period, the American colonies began to issue their own money. Called colonial scrip, the endeavor was very successful. It provided a reliable medium of exchange, and it also helped to provide a feeling of unity between the colonies. Remember, colonial scrip was just paper money, debt-free money, printed in the public interest, and not backed by gold or silver coin. In other words, it was a totally fiat currency. One day, officials of the Bank of England asked Franklin how he would account for the newfound prosperity of the colonies. Without hesitation, he replied,
"That is simple. In the colonies, we issue our own money. It is called colonial scrip. We issue it in proper proportion to the demands of trade and industry to make the products pass easily from the producers to the consumers. In this manner, creating for ourselves our own paper money, we control its purchasing power, and we have no interest to pay to no one."
This was just common sense to Franklin, but you can imagine the impact it had on the Bank of England. America had learned the secret of money, and that genie had to be returned to its bottle as soon as possible. As a result, Parliament hurriedly passed the Currency Act of 1764. This prohibited colonial officials from issuing their own money and ordered them to pay all future taxes in gold or silver coins. In other words, it forced the colonies on a gold or silver standard. For those who still believe that a gold standard is the answer for America's current monetary problems, look what happened to America after that. Writing in his autobiography, Franklin said,
"In 1 year, the conditions were so reversed that the era of prosperity ended and a depression set in to such an extent that the streets of the colonies were filled with unemployed."
Franklin claims that this was even the basic cause for the American Revolution. As Franklin put it in his autobiography,
"The colonies would gladly have borne a little tax on tea and other matters had it not been that England took away from the colonies their money, which created unemployment and dissatisfaction. The inability of the colonists to get the power to issue their own money permanently out of the hands of George III and the international bankers was the prime reason for the Revolutionary War."
By the time the first shots were fired in Lexington, Massachusetts, on April 19, 1775, the colonies had been drained of gold and silver coin by British taxation. As a result, the Continental government had no choice but to print money to finance the war. At the start of the Revolution, the U.S. money supply stood at $12 million. By the end of the war, it was nearly $500 million. As a result, the currency was virtually worthless. Shoes sold for $5,000 a pair. Colonial scrip had worked because just enough was issued to facilitate trade. As George Washington lamented, "A wagon load of money will scarcely purchase a wagon load of provisions." Today, those who support a gold-backed currency point to this period during the Revolution to demonstrate the evils of a fiat currency. But remember, the same currency had worked so well 20 years earlier during times of peace that the Bank of England had Parliament outlaw it. Towards the end of the Revolution, the Continental Congress, meeting here at Independence Hall, grew desperate for money. In 1781, they allowed Robert Morris, their financial superintendent, to open a privately owned central bank. Incidentally, Morris was a wealthy man who had grown wealthier during the Revolution by trading in war materials. Called the Bank of North America, the new bank was closely modeled after the Bank of England. it was allowed to practice fractional reserve banking. That is, it could lend out money it didn't have, then charge interest on it. If you or I were to do that, we would be charged with fraud, a felony.
The bank's charter called for private investors to put up $400,000 worth of initial capital. But when Morris was unable to raise the money, he brazenly used his political influence to have gold deposited in the bank, which had been loaned to America by France.
He then loaned this money to himself and his friends to reinvest in shares of the bank. And, like the Bank of England, the bank was given a monopoly over the national currency. Soon the dangers became clear. The value of American currency continued to plummet. So, 4 years later, in 1785, the bank's charter was not renewed. The leader of the effort to kill the bank, William Findley of Pennsylvania, explained the problem this way, quote, "This institution, having no principle but that of avarice, will never be varied in its object, to engross all the wealth, power, and influence of the state." The men behind the Bank of North America, Alexander Hamilton, Robert Morris, and the bank's president, Thomas Whiling, did not give up. Only 6 years later, Hamilton, then Secretary of the Treasury, and his mentor, Morris, rammed a new privately owned central bank through the new Congress.
Called the first bank of the United States, Thomas Whiling again served as the bank's president. The players were the same, only the name of the bank was changed.
In 1787, colonial leaders assembled in Philadelphia to replace the ailing Articles of Confederation. As we saw earlier, both Thomas Jefferson and James Madison were unalterably opposed to a privately owned central bank. They had seen the problems caused by the Bank of England.
They wanted nothing of it. As Jefferson later put it,
"If the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and the corporations which grow up around them will deprive the people of all property until their children wake up homeless on the continent their fathers conquered."
during the debate over the future monetary system, another one of the founding fathers, Gouverneur Morris, castigated the motivations of the owners of the Bank of North America.
Gouverneur Morris headed the committee that wrote the final draft of the Constitution. Morris knew the motivations of the bank well. Along with his old boss, Robert Morris, Gouverneur Morris and Alexander Hamilton were the ones who had presented the original plan for the Bank of North America to the Continental Congress in the last year of the Revolution. In a letter he wrote to James Madison on July 2nd, 1787, Gouverneur Morris revealed what was really going on.
"The rich will strive to establish their dominion and enslave the rest. They always did. They always will. They will have the same effect here as elsewhere if we do not, by the power of government, keep them in their proper spheres."
Despite the defection of Gouverneur Morris from the ranks of the bank, Hamilton, Robert Morris, Thomas Whiling, and their European backers were not about to give up. They convinced the bulk of the delegates to the Constitutional Convention to not give Congress the power to issue paper money. Most of the delegates were still reeling from the wild inflation of the paper currency during the Revolution. They had forgotten how well colonial scrip had worked before the war. But the Bank of England had not. The money changers could not stand to have America printing her own money again. So the Constitution is silent on the matter. This grievous defect left the door wide open for the money changers, just as they had planned. In 1790, less than 3 years after the Constitution had been signed, the money changers struck again. The newly appointed first Secretary of the Treasury, Alexander Hamilton, proposed a bill to the Congress calling for a new privately owned central bank. Coincidentally, that was the very year that Amschel Rothschild made his pronouncement from his flagship bank in Frankfurt. Let me issue and control a nation's money, and I care not who writes the laws.
Alexander Hamilton was a tool of the international bankers, and he wanted to create the U.S. Bank, the BUS, or the Bank of the United States, and did so.
Interestingly, one of Hamilton's first jobs after graduating from law school in 1782 was as an aide to Robert Morris, the head of the Bank of North America. In fact, the year before, Hamilton had written Morris a letter saying, "A national debt, if it is not excessive, will be to us a national blessing." A blessing to whom? After a year of intense debate, in 1791, Congress passed the bill and gave it a 20-year charter. The new bank was to be called the First Bank of the United States, or BUS. Here we are in front of the First Bank of the United States in Philadelphia. The bank was given a monopoly on printing U.S. currency, even though 80% of its stock would be held by private investors. The other 20% would be purchased by the U.S. government. But the reason was not to give the government a piece of the action. It was to provide the capital for the other 80% owners. As with the old Bank of North America and the Bank of England before that, the stockholders never paid the full amount for their shares. The U.S. government put up their initial $2 million in cash. Then the bank, through the old magic of fractional reserve lending, made loans to its charter investors so they could come up with the remaining $8 million of capital needed for this risk-free investment. Like the Bank of England, the name of the Bank of the United States was deliberately chosen to hide the fact that it was privately controlled. And like the Bank of England, the names of the investors in the bank were never revealed. Many years later, it was a common saying that the Rothschilds were the power behind the old Bank of the United States. The bank was sold to Congress as a way to bring stability to the banking system and eliminate inflation. So what happened? Over the first 5 years, the U.S. government borrowed $8.2 million from the Bank of the United States. In the same 5-year period, prices rose by 72%. Jefferson, as the new Secretary of State, watched the borrowing with sadness and frustration, unable to stop it.
I wish it were possible to obtain a single amendment to our Constitution, taking from the federal government the power of borrowing.
Millions of Americans feel the same way today. They watch in helpless frustration as the federal government borrows the American economy into oblivion. So, although it was called the First Bank of the United States, it was not the first attempt at a privately owned central bank in this country. As with the Bank of North America, the government put up most of the cash to get this private bank going, then the bankers loaned the money to each other to buy the remaining stock in the bank. It was a scam, plain and simple, and they wouldn't be able to get away with it for long. But first, we have to travel back to Europe to see how a single man was able to manipulate the entire British economy by obtaining the first news of Napoleon's final defeat.